We watched a remarkable rise in these stocks. Some people thought they were Reddit stocks over the past month and a half. Now we're learning that perhaps it wasn't just David and Goliath. It might have been Goliath and Goliath. What do you make of the rise, and also what do you make of the fall at this point?
Well, Andrew, I think you just nailed it. I mean, for the last 2 months, I'd say that the number one conversation I've been having with fund managers really all over the world was, what is happening? People couldn't figure out where this buying. They didn't see it on Reddit message boards. They didn't see it as the next meme stock. So they kept seeing these stocks go up 6-7% every day on no news. I mean, analyst days that were fine, but certainly weren't like, oh my God, these were amazing. And yet the stocks just kept going higher and higher and higher. And I think it now becomes increasingly clear that there was somebody that was buying sort of price agnostic all the way up and creating a larger and larger short squeeze for a lot of investors who were skeptical of these moves. And it just kept getting, it kept kind of self-propelling itself to ever higher levels until obviously it all came crashing down last week. And so to me, it's less about the fall and more of the craziness that drove this sort of irrational buying over the last 2 months.
So let's talk then about fundamentals, if we can. I know nobody talks about fundamentals anymore, but when you look at a Viacom, CBS, or Discovery, it's obviously been pushed down. Do you look at this and say there's a buying opportunity because there was so much pressure on the way down? What valuation would you put on both of these companies?
Look, I think that the challenge that everybody in the media space is having, and this is not unique to Viacom and Discovery, everyone is trying to figure out how they transition to a streaming world. I mean, we put out a piece this morning basically talking about how if you looked at all the major companies that have given out guidance, as well as sort of the big players that are already there like Netflix and Amazon, roughly 650 million global streaming subscribers are set to double to over 1.2 billion by 2024. And that means that's if everybody hits on their numbers. Now, you and I, Andrew, both know it's going to be hard for every single player in this group to win. And so I think the real question is going to be, which of these companies has either a differentiated strategy? I think Discovery's probably got a little bit more of a differentiated one. They're not trying to be Netflix, but they're all trying to grow their streaming businesses. And the one thing everyone's got to keep focused on is that the traditional business is collapsing. You can't tell consumers, go get this service.
Would you be buying a Viacom today? Would you be buying a Discovery on what looks like weakness? Or do you think there's a fundamental issue here? I mean, last week, seeing Viacom go to the market, sell those shares, the market was not there for them. Clearly, it looked like
hold on. I would stop. They got $85 a share. I mean, the stock is at sub 50. They got $85 a share. Their stock was at 12 not too long ago. So I would say the stock sale was a brilliant move by Shari Redstone and Bob Bakish. They got capital. They needed more capital to invest in streaming. They did the right thing. I think more companies should have raised capital with, kind of irrational stock prices. So I commend them for doing that. But to your question, Andrew, of where do you step in? Look, I think the challenge is right now, cord cutting's getting worse. Advertising is slowing. Like everywhere you look, the traditional media business is under pressure. This is not specific to these two companies. The whole sector is under pressure. The only way you can be buyers and really believe in these companies long term is if you think they can scale their streaming businesses to be global powerhouses that overwhelms the pressure on their core businesses. That is not an easy challenge. And I think that's what was so confusing is that everyone was sort of looking at this space going, these companies are under real challenges, and yet their stocks went vertical.
Rich, so I just want to go back to this. You really think it was the right move? I understand the move for Viacom to raise cash. I get that. But the question is whether by doing that, they've actually created, to some degree, may have even created the problem we saw last week and where the stock now trades and creates all sorts of trust questions in terms of how investors are looking at these businesses. No?
This is a war. The war for consumer time and attention. You need amazing content. Netflix is spending $17.5 billion a year on content. Viacom came out with their analyst day. It was fine. They showed off a lot of content, but they really didn't have like a must-have huge critical show. I think raising another $3 billion, having just doubled their cost to the NFL, as well as now having $3 billion more dollars to go build content, I think that was a pretty smart move if you're looking out 5 to 10 years. If you're looking in the next, obviously, a few weeks, it was obviously a negative move for the stock. But I think if you look at sort of what they need to do to compete and quote unquote win long term, I mean, I wish in many ways, I wish they would raise even more capital.
Shepard Smith here. Thanks for watching CNBC on YouTube.